Good morning. Welcome to Options Center. Just want to give you a higher time frame point of view. We'll go down to a couple of these tickers on the lower time frame, and we'll finish off with the 65-minute. But I think we're going to focus mostly on SPY, the VIX, and TNX, the 10-year rates. Now, I'm going to reiterate how important I think there's a change of character is of the rates. I think the rates are going to bring the market down. I think that's the intention, that the Fed will no longer raise anything and actually force them to cut. And per last video, it looks like March of next year is kind of more of our target. Probability of rate cut in January, it's slight, but yeah, we can look at those in just a little bit. So make sure you stick around for most of this video here. If you at minimum, a lot of the important stuff is going to be towards the end if you're looking for near term stuff. So we're going to fly through the weekly time frames just to give you an optical point of view of where the market stands and why I'm actually in a bearish position, and we'll go from there. So if you're new here, go down to that bottom right hand corner, hit that Options Center logo, and subscribe. We have lots of good information here, so hit the notification bell. I appreciate each and every one of you, and especially if you could like the video. That's the best thing you can do to help us grow this. We've grown exponentially in just a few months here, getting past that 500 mark, and we're looking for the 1,000 mark. As soon as I get my new office done, we'll start doing lives. But for right now, we'll just keep these videos going, and thank you. So we have SPY on the weekly time frame. We're we're getting tight here for the past year. So we had a year of downside initially, and we're just kind of triangulating at this point to where I think we might triangulate just a little bit more going into the new year, where I do believe we're going to get a pullback. I know it seems like forever since this move came up here. We're in a consolidation mode, and I think we're forming a reversal type setup. And I do think we're going to get our reversal here. So it's unclear exactly how far we'll retrace. I think it's going to be the deeper end of the retracement and then get some sort of bounce. So perhaps take out this pivot here, go down to the next pivot, maybe bounce back up to retest in this area, this zone, which would be just about the middle of this sort of triangle, and then start heading lower from there, meaning that we have a top here. Now, I talked about it in the last video to where it would be easier on us. It doesn't matter, but it would be easier on us if we did take out this high on SPX and on ES. We have not. On SPY, we have. So it would just it would sort of consolidate our wave counts heading lower. But when you start getting to the end of them, one can make a new low and one may not, in order to even it out. So not super important. It would just make it easier. But I feel as if we're not going to get that new high. Okay. Now, just talking about the weekly candles itself, I do believe this is a top. We have a top here. We are in an inside week at this point. Could we end the week here? Sure. Tomorrow we have employment, so that's a possible catalyst before the bell. That could be a devastating move, or really could just pause. We get our inside week, and then we continue down next week. All right, so far it's been a seller's market. If you've been selling calls, amazing. I would be afraid to sell puts, but if you're selling calls, nice work. I have not been. I've sold calls against my, spreads. I've had spreads, but that's what I want to show you there on SPY. So just kind of tightening up. Even though these are large moves, the range is getting a little bit tighter and clearly faster, riding the elevator up and the stairs down. So mainly on the Qs, we see our major trend line down here. We see the ascending triangle here. That's our optical vision that we could fill this out just a little bit more. It's possible. I don't think that's the case that we fill it out more. If we do, that's fine. The Qs can make new highs, but I suspect that SPY has its all-time high in. Now, if the Qs do the opposite, it won't make a lot of sense to me. Usually the Qs lead to a new direction, so there would be some divergence there. But we'll keep an eye out for that. But look at this consolidation over back in 2022, the beginning of it, and the end of 21. Huge consolidation. I just wrapped two horizontal lines there, and you see how important we had a top here, and price is just holding this 384 area. Price is holding there. It's a very, very important area. If we break down from here in the Qs, then that is considered a fake break, and then we break out of this consolidation zone, which we consider supply. So price wants to, in a normal situation, a price wants to go from one end being support to resistance, being the top here. So that's certainly a scenario. We've consolidated long enough, and in this case, in the Qs, we've been here over 3 weeks. After we reach this zone here, we have 5 trading days here, 5 here, and we're going on 5 here. So we're at about 15 trading days. It's 21 days. It's 3 weeks. That's a long time to be in a zone. So we either pop to the upside and go to the top of that zone there that we're talking about around 401 quickly next week, or tomorrow. I mean, that's always a situation. Or we finally have our breakdown, and that's going to be pretty devastating. I think after a move like this, it should be a pretty sharp move after a consolidation like this, and it should be pretty relentless. And that would go along with my bear thesis that we break the wedge and continue lower, but may not happen without a bounce. Okay, so that's important. From the IWM perspective, from the weekly perspective, we have our descending triangle. That's the way I'm looking at it. You can draw it a couple different ways. I know that on the daily, we have more of a bear flag look because it's in a channel. We bounce off the bottom of the channel. We're testing the 200-week moving average. So I'm not sure if we're going to get too much higher. It's possible. Talked about on the last video that we could still go up to the 190 area and be a normal 786 retracement before heading lower. Looks like the VIX is moving a little bit. Maybe we're getting some movement to the downside. We'll check it out. The IWM was up to, I think, 1.7% at one point, so it's cut half of its gains so far today. Look at DIA, the Dow. Okay, so the Dow, this is the ETF for the Dow, right back at the resistance, and I said in the last video that we might have a little bit of space to move here. Yeah, it looks like we're getting some lows of the day here. We might have some space to reach a little bit higher, but it's really a zone, so that it stops a little bit short. Yeah, we could use the bodies here and the wicks, and we'd be right at it. So that's important to know that this could be the reversal spot. We might have inched a little bit higher, might have broke through, but we came right to it. And maybe reversing right off of here. We have a potential reversal candle, but that we still have another day with the unemployment So could move further, but maybe just forming a reversal candle, and next week would be the start of our reversal. So taking a look at the VIX, and then we'll go to TNX. Looking at the VIX, this is clearly a bullish on the VIX, but a bearish optical on the market. And that's what technical analysis is, you guys. It's forming charts and patterns in order to give it an optic of what your viewing of the market is. And remember, we're seeing a re-steepening of the yield curve, a normalizing. And so, sorry about all the alerts there, but a renormalizing of the yield curve. And so we're very bearish. We see a recession on the horizon, and I mean within days to weeks. And we're forming a falling wedge here, and in the weekly time frame, we're just bouncing right off of the bottom, the support of the wedge. So we had an inverted hammer. So we had a potential reversal here. Now we have an inside week so far on the VIX. So I do believe we're starting to form a reversal pattern. I do think we're going to get some follow through pretty soon. We haven't seen it yet. We need confirmation to get above this candle, above the 14, a little bit above 14, but that will be, the 14 will kind of be our key level, and that's the bottom of this area here. And now with the TNX, we're keying in on this, and I don't look at it so sharply. I just know that we always, when we talk in our in the trading room, in the Discord, we talk about bonds. Now, when bonds make huge moves, it really doesn't matter which direction, in a sense, because the rates they affect certain sectors of the market when they move up, and they affect different sectors when they move down. So effectively, if there's large swings in the market, meaning this is a weekly time frame, a swing like this is going to affect the market. So it started to drive the market down when we made large moves in rates. Now the market's happy at this point, and notice that we're just backtesting. This is a huge run here. We broke down from our trend, and we're just backtesting here, and now we're breaking down again. So that's a potential top there, and we're underneath a lot of these trending indicators. The 8-week moving average, excuse me. Sorry about my voice. So we're starting to head down. And what the characteristic that I was talking about is we're getting pretty relentless to the downside. And, the rates, the 2-year rate in order to normalize, needs to go down faster than the 10-year, or if the 10-year, and we'll show you on the lower time frame, starts to stabilize, maybe at this point, we can draw a line somewhere around here. If you notice, I get these tops right around here. And again, it can be a zone because you have a larger zone here. You have support, resistance, and consolidation area. So you can consider that resistance at that point because we started to head down. So we're right at that point, perhaps just a little bit lower. So if the 10-year starts to stabilize and the 2-year goes down, that's still a possibility of things normalizing. But getting down to this support area, maybe we get a bounce. Maybe I'm wrong, and inflation really starts to ramp up with the economic data, and rates start to move higher with maybe even with data not being so bad. I don't know. I don't think that's the case. I'm just kind of speculating here, but maybe we get a bounce here, and the market hasn't quite changed its correlation, but maybe with the bounce we start to get our pullback from the we start getting pullback here with rates, and it brings the market down because of the situation that we've been, that would be negative towards the market. But at some point, they're going to correlate. The market's going to go down when rates go down, and that's really the devastating scenario. So we'll check out this bounce if we do get one. If we continue to break this level, we should just say see you later, and I think that would be the start of our recessionary time period, and the market should continue to go down with it. This has already been a large move to the downside. Okay, so I've rambled on enough at this time frame. Let's go ahead and just shoot over to the SPY, and we'll look at the daily 65. We'll move from there, and we'll try to move just a little bit quicker now. But that was the important information that I want to get, and on a higher time frame. So let's go to the daily. Trend is our friend. Now, I know I've been fighting the trend here, right? This reversal type area, but our trend is still down. We're making a lower high at this point. So that's very important to me, that the trend is my friend to the downside on the higher time frames. And so you see, after we got above this support area here, you see this consolidation area. Now we've drifted up, and it's been more sideways on the Qs, but we have our 3 weeks just drifting to the upside, and that's allowed IWM and DIA, the Dow, to head higher. Now we have, this is actually pretty funny. This looks very similar to where we peaked, had some consolidation 3 days in a row in this large candle. So fairly large candle. We're on the third day of being in this zone. A gap and crap here, but we're still right on that 8 EMA. In this situation, we had a gap down lower underneath. Are we going to get that same situation with the unemployment? Perhaps. Or maybe we just continue to grind one more day into Monday, perhaps, in this zone before breaking down. So we do have a catalyst tomorrow, so I can't promise what really happens, however the market takes it. But I think we're getting pretty close here. I think we could bet on that. So we are betting on that, as a matter of fact. Now to the 65-minute. Now the 65-minute, you'll see that we have a channel. So this drifting up is really just forming a channel here. And so we'll have our confirmation sell signals after we break down from this channel. But as of right now, we are in a channel. Can we pop back up? And in the scenario that I said that, SPX and ES, the futures, S&P futures, can finally make a recent high, like SPY did here. It's possible. But when we start breaking down from this channel, that'll be a very important sell signal for us to press on the accelerator to look for lower prices. And I'm looking for pretty sharp lower prices, especially after a consolidation move like this. Okay, now if we move over, maybe I can give you an example. I think the top is in. So I do think that we're looking for our wave 1 here pretty soon. I know that doesn't really show you a whole lot here. I'm looking for the B wave to be done. We have A. We have a 5. I had to move the B over here because SPY made a new high. On the SPX and ES, it's still here. The B is still over here. Now you can move it over here as well and call it truncated and things like that. But we'll keep SPY being our main ETF that we'll use on these videos. And so we're looking at B being in, and now we need an impulse wave down. And that's where I think we'll start testing those pivots, and we'll get a bounce for a wave 2. It could be Could be a deep bounce. We'll see. But that should bring us, it should keep us into this triangle, possibly right into the end of the year. So do I think we break down before 2024? Not really. I think we should get our bounce here. We keep everybody in limbo because of a bounce here, and the bulls will say we'll go to make new all-time highs at that point. But the bears will say it's just a bounce and we'll sell into it. Now, if we move over to the VIX, moving over to the VIX, you see that we're on those lows, but we're starting to make higher lows. We broke out of the channel. We're back testing the channel. We closed the gap from Friday into Monday, and we're holding a slight uptrend at this point so this could be a 1 2 1 2 setup before moving higher. We'll see what happens going in tomorrow. If all this holds, I can get rid of that gap there, and then I guess we'll do the Qs and TNX, and then we'll finish up here. So we're starting to break down a little bit here in the Qs. Qs have been leading the direction, and I've said that this is the top here. It's held. It's still the top. We did that last week, and we're just kind of drifting lower at this point. But like I said, this 343 area is really going to be key. Going on the 65. If we start breaking down, we had a downtrend here. We start breaking down from there. That would be a good sign that this isn't holding and this isn't a bullish move. We're actually bear flagging. So we have a bear flag right here that we could kind of draw in if you use the channel tool. These are the things that I do each and every day. So if this helps, just let me know. We're kind of breaking down. We're breaking down from that trend at this point. That's a perfect channel. Perfect channel. Now, if this doesn't hold, this downtrend, then we had a bear flag breakdown because we're already breaking down from that. We just have to hold this key pivot, these lows right here at 386, along with that downtrend line. And see, this is the bullish perspective. That's why we draw these. That's the bullish perspective. That downtrend line, we're just back testing. We go higher. The bear perspective is this channel breakdown, and we're breaking down from it right now. We have lots and lots and lots of gaps to fill. Not going to look at those. And the last thing is TNX. Just to finish off our main indicator of what we're looking at right now. So we have on the 65, we broke down from major resistance. We have a wedge, broke down from there. Do we hold this point? Let's go over to the Elliott wave. This is the most important part. We have our move from this. We're looking at a 1-2-1-2 setup. I think it might be better to look from the daily time frame. So we had our setup here where we have a 1-2, 1-2, and then a 1-2 and a 1-2 setup. Now, it doesn't look likely to me. I still think we come down to this 200-day moving average, but that's the only way I can count it right now. It's kind of an odd sense of counting a 1-2, 1-2, just like the market. Some people are calling the SPX into a 1-2, 1-2 and setting up another 1-2. Very, very bullish. So if that's the case, then, if this holds here, then that could be pretty darn bullish for this. But I do suspect we break down, test the 200, perhaps get a bounce from there. Maybe a slight bounce, because this could be a 1, 2, 3, relentless wave 3, wave 4, continue lower. That seems more likely the scenario. You say, well, why don't we just pull this here from the bottom? That's possible too. And so we're at a 50% retracement. Maybe this is where we get our little bounce, and then we go down to test the 62, which would bring us underneath that 200-day moving average. Any of those scenarios would work. The one that fits more with that mega bullish scenario on the market was a 1-2-1-2, just like the market. So we'll see if we break down from 41. From here, we have the 50% retracement. Usually get some sort of reaction anytime you touch a 50% retracement in any sense. You usually at least get a reaction. So we'll see what happens here. That's all I got for you. Thanks for joining us here at Options Center. Have a wonderful day. Don't forget to like the video. We'll talk to you tomorrow.